All right, week two, outlook number one. Let's go ahead and get into it, starting with the British pound futures on the daily. So, from the macro perspective, we cleared the liquidity point that we pointed out in the previous outlook. And on the 4 hour, what it looks like was reiterating we had mitigation of a previous area of interest that was following mitigation of a previous area of interest. We had a little bit of consolidation before we pulled back. So understanding, this consolidation, I expected price to, once we took out this low here, I expected price to run to take out this high and start to move higher towards the ideal area of interest to continue this bearish run. But because it failed, I went back and reanalyzed and saw, oh, yeah, price is looking, if it didn't have enough juice or liquidity to take out this high, it's going to pull back into a deeper liquidity pool in order to uh, fuel the rest of the move to take out this high, and then we should be looking to move higher. And so that's exactly what it did. It pulled back into this 4 hour area of interest. Then we got, entry opportunities if you got those. I did not. I wasn't looking at it. I just let it go. And then ultimately today, over the course of 4, 8, 12, 16 hours from mitigation of that, area of interest, we ran that high. And so now what I'm expecting is continuation of this current, small bullish run internally of this external or the macro bearish run up into the area of interest in which I want to see price, then run lower. All right, so that's what I'm seeing currently on GU, so I can get rid of all of this. We have the high mitigated. All right, so this is what we're looking at. So ultimately, what I'm looking for is a push up into this 4 hour area of interest, which is over here. Primarily, I'm looking for the open to be mitigated. I'm not going to go over entries, but that's where I'm looking at. And then I want to see price then press lower long term, especially towards this low. And then, like I said before, I wanted to hit 1.2716. Now, the counter narrative is if this fails, then we continue higher, and then we just look for a continuation of bullish price action and then find entries from there. But based off of the transition of state stated before, where we transitioned from a bullish run into a bullish range and now we're in a bearish run, I want to see price pull back into the premium, completely balance out this price leg overall, and then press lower. On really, I want to see a low friction liquidity run at least to take out this low once we mitigate this. But if we get some sort of friction, it would make sense. But if this is the actual state of the market, we are in a bearish run, then I would actually expect or anticipate low friction liquidity runs to take out these liquidity points at these lows, and then ultimately taking out this external liquidity point here. All right, so that's the British pound futures, 6B1. Moving on, like I said, the S&P 500, I don't really look at it, I just have it on here. GC1, all right, so we got exactly what I talked about. Looking at it from the daily, well, these are what we were looking at was continuation of the bullish run. So now we've established our price leg where we had the low here, then internally we have lows and highs up until this point, and then we had a break of structure here in which we went down to the 4 hour time frame and identified why this was a break of structure and not a draw on liquidity. It was based off of the fact that this price gap failed to hold the price action to move higher, and then once that broke again, I classify this as a break of structure rather than a draw on liquidity. And then because of the price action in this area in which it did start to move higher again, I said that if we were going to move higher, it would more likely than not be to mitigate this 4 hour area of interest here, which is there. And so once we mitigated that, I would said I was going to look for entries, and I expect price to, or not express, I anticipate price to move lower from here. Now, if it continues higher, then I'll reanalyze and figure out what went wrong in my analysis. But as of right now, I'm confident that the price action is going to turn over to pull back, especially if this is the solidification of this overall price leg and then move back into balancing whatever inefficiency, which, this area of interest is interesting to me, supported by this liquidity, these equal lows here, and understanding that it is below the equilibrium line, so it's in the discount, looking for continuation of price action to the high side. I would like to see price turn over here to take out at minimum this low of the breaker structure and then onward towards this area of interest. Now, this is a very interesting time for gold because of all the external noise or the external influences. So we're going to see what happens. I'd like to see price, based off the price action, continue lower, but if it continues higher, then well, we just look for more opportunities to buy gold. All right. Moving on to the NASDAQ. So starting off on the macro, we are still stuck in this really weird-ish area. So initially we had the draw in liquidity that led to a run up, but it had unwillingness, and then we pulled back, mitigated, an area of interest here, and then we ran higher, showing willingness now again, and then we're pulling back. And so on the 4 hour, what we're seeing is more resolution here, but seeing that we have that mitigation here, in which we then mitigated, this area of interest there. Then we had our run again, and then we had a stall, and that stall led to the bearish price action that we have here, which ultimately ran below this area of interest, which is marked up here. And so because we ran that low, I anticipated that price was going to continue lower to fill whatever is inside of this price, or this little run here. And so I identified two areas of interest. I haven't gone too deep into looking for entries or anything of them, only because this is just a very weird area to analyze for me. So I'm going to be a lot more conservative when looking for entries. I'm still sticking to the overall macro bias that we're looking for continuation of the bullish run. But as of right now, on the short term, I'm looking for price to actually, it seems like it mitigated this bearish area of interest, and I would like to see price continue to go lower to mitigate one of these two areas of interest. And I'll look for entries upon that, but I'll probably use the models that are more conservative rather than aggressive for this because of the price action, the nature of this price action. So yeah, that's in queue. And now the big one. Holy Dow Jones, absolutely, it was perfect. I talked about this in the last week, what I anticipated where it was going. I talked about it in my trade review of this, where I did catch entry off of a 1 minute sponsored candle here. Took profit here at the high only because I'm building a really small account from future standards. So what I was anticipating was to get entries in, but I wasn't at the charts at the time to look for the entries. And ultimately, price decided at 9:30 to just go ahead and say, all right, we're just going to go ahead and take all-time highs. As expected, I pointed out that my ultimate target, or my real target, if I was to hold this, was going to be the all-time high. And conservatively, it would have been the unwillingness, or this liquidity point, internal liquidity point of this overall price leg existing from this low here to that high here. And so because of that, price ran all-time highs today, very low friction, very high volume liquidity run. This was picture perfect. These are the types of trades that I love to see. I love the volatility. I love the easiness of these, trades. And I just wish I was able to hold it. But it is what it is. It'll come with time throughout, as progress into the year, as I grow this account. I'll be able to hold these trades for a lot longer and catch and capture the entirety of these moves as I see fit. But yeah, by the end of this month, I'll definitely be able to hold, at least 1, 2 contracts on Dow Jones on at least the YM1. I'm looking, like I said, I execute on the micros for right now. So until I build it up to, capture those contracts by the end of the month, that's my goal. I'll be executing on the micros, but it's the exact same price action, just smaller contract size. But yeah, looking for, now that we've cleared this high, we can clear out some of this so we can reanalyze what is going on. God, this was just perfect. Alrighty then. So, moving back out to the daily, now that we have established that we're continuing on, what we would be looking for now is waiting to see what price is going to do next. I will say that this, as of right now, looks sort of like a draw on liquidity, but I need a little bit more price action, or the next stage of price action coming into the new day. If I scroll down to the 4-hour time frame, I only have two candles really to look at. Um, so I would like to see, or anticipate, that like I said, we've shifted our structural point essentially on the 4-hour to here. So now what I would be looking for is a pullback into any area of interest or any inefficient pricing to fill inside of this area, or generate any inefficient pricing to then continue pressing on higher. And then the counter narrative is, because we've now just taken out all-time high, we usually expect some sort of pullback to draw into deeper liquidity pools. But essentially everything from here into here is completely balanced now. So if there is any break of, or any failure of area of interest here inside of this area of interest or this area of interest, then yes, I most likely see this going lower towards to the structural point, and then we'll have to assess the action that occurs here. But as of right now, I'm just expecting price to pull back to fill any inefficiency, because this was such a low friction, high volume run. There's a lot of inefficient pricing inside of this area. So that's what I'm seeing on the Dow Jones, or YM1 currently. Moving into the rest of this week, there's a lot of news slated for January. Not that it really matters, but not that it matters that I look at news, but it matters the fact that there's going to be a lot of volatility, and I love volatility. All right, so that's what we're seeing on YM1, and we're back to the British Pound Futures. That is it for week 2 outlook number 1. See you guys on Wednesday. Peace.